And with all the uncertainty around where the economy is headed, you also have sticky inflation and a Fed funds meeting this week. What are the top three things we need to be looking for? Top three that we need to keep an eye on that are going to move interest rates this week. And hey, should we be in a position to lock? Or are we going to ride the storm? What's going on, y'all? My name is Kevin Weedmar, coming to you with another weekly episode of The Week Ahead. Every week, I dive in very quickly on a Monday, wrap up the top three things you need to be looking at in data sets and where they're coming, and the things that have the biggest potential to move those interest rates so that you're in the best position to make the best financial decisions for you possible. So let's just dive right in. And oh, by the way, please don't hesitate to hit that subscription button so you never miss a beat. And I'll, at the end of this video, wrap up a little bit about who I am and how I could help you. So let's just dive in. Number one, I already said it. The Fed meets this week. It is a highly anticipated meeting. And I want to say it's not highly anticipated because what the Fed is going to do, the Fed is going to issue a quarter-point rate cut. There's no doubt about it. It is coming. The labor market is sluggish enough. It looks like the economy is really slowing. We still don't know how slow. We still have sticky inflation, but the political pressure has been there. The economy is slowing. There's no doubt about it. The Fed needs to do something. They need to get off their ass and do something. They put us in this position. It's time to now start acting, giving the numbers coming out of the labor sector. So number one, we're going to get that. But that's not going to be the big news. The big news is going to be the Fed Chairman Powell and his statement. That's going to be number one. Is he more dovish? Is he more hawkish? Is he saying, hey, the labor market and the economy is slowing so much that we anticipate multiple rate cuts as we close out this year? That's the anticipation. Or does he say, once again, we're going to analyze data. We're going to need to analyze it a little bit more closer, taking a hawkish stance, given that inflation, once again, not really tariff driven, but it's not coming down. It's a far cry from our 2% target rate. So we need to be extremely cautious with what we do moving forward. He could absolutely say that. I wouldn't be surprised if he said it. I think it would surprise the market a little bit. That would push interest rates up. And I think if he gets extremely dovish and it really shows grave concern with regards to the economy, regardless of inflation, right? Where they wanted us to be, where we needed to be. They've been telling us that forever. I think that we see rates rally. So it's something that it has the potential to move the markets. The other thing that can move it, part of that whole meeting, is the dot plot. The dot plot is where we get a look into what all Fed members are thinking. It comes out 4 times a year. This is one of them, comes out in December as well. And it gives basically about a 2-year outlook of where each Fed member believes the Fed funds rate will fall and when. That is going to be critical. We've seen dissension amongst the ranks. We've seen a couple of Fed members already come out in previous meetings indicating, yes, a cut should have already been done. So this is going to be really a telltale of how much inside pressure is being mounted at the Fed and pushing the Federal Reserve as a collective group to make more aggressive moves, which is essentially what the market wants to see. They love it. They want to see it. So that is going to be the biggest news this week, and that is happening on Wednesday. So if you see this is the economic data for the week. This is the big daddy stuff that really has the potential to move it, and this is where I focus. So you see that's on Wednesday. On Tuesday, however, what you can see we have retail sales. Retail sales account for 2/3 of the gross domestic product. That is massive. And given the recent indicators that we got from consumer sentiment, the Michigan consumer sentiment, and so on and so forth, the consumer is on the ropes. They are ready for a knockout. Their resiliency has been absolutely amazing. I've been talking about it now for quite some time. And actually, I'll even stand corrected. I believe it was probably about a year ago, if I go back and look, I was already calling for the consumer to pull back, and they kept spending money. Make no mistake, we Americans, we love to spend dough, even dough that we don't necessarily have. But hey, I believe that we're going to see a huge pullback. And what is that effect going to be on that GDP number? And more importantly, how is that going to affect the auctions? And I'm talking about the 10-year and the 30-year, which are coming up again, probably in about 2 weeks time frame. If we start getting a huge consumer pullback, You may see some foreign investments start to pull back a little bit as well. It doesn't look as sexy. The consumer slowing down, GDP is slowing down, the U.S. economy is slowing down, so they might not have an appetite for that debt. So the overall effect of what this retail sales numbers could mean could be significant, especially as we head into Q4, where we get into some holiday spending and the expectations continue to increase. So that's going to be the second thing, and that's going to be tomorrow. So it's going to carry some weight, but it's not going to carry huge weight because you got the Fed once again on Wednesday. The combination could mean something, right? Come Wednesday, and it could affect the Fed decision. So you may see, depending on that number, some reaction in interest rates. So you want to make sure you keep a close eye on that. The last thing that we want to look at, and that is coming out on Thursday. And it's funny, for a while, we used to laugh at initial jobless claims. It is a weekly data set. It comes out every week. Like I just said, 52 weeks in a year, boom, boom, boom. And for a while, no one really cared. You look at it, you glance at it, it misses by a little bit. Maybe it missed by a lot. Yeah, but the non-farm payroll, all excuses. Now, given the condition of the labor market in the slowing economy, initial jobless claims is huge. It is now a mover of the market to where it could move interest rates, I'd say at least an eighth, especially depending on what the Fed has to say, right? If the Fed is indicating, hey, the economy is really in dire straits, we need to get aggressive, and then you get a really a highly increased initial jobless claims number, you're back up into the 260, maybe 270,000 initial jobless claims. That is going to spook the markets, and we will absolutely see a rally in interest rates. So again, those are the top three things. You got a Fed meeting on Wednesday, you got retail sales tomorrow, and you got initial jobless claims on Thursday. And this is my weekly newsletter. I put it out in edited form. You can read it. It comes out. I send it out in an email format. If you'd like a copy of that, please don't hesitate to slip into my DMs. Just shoot me your email. I can add you to that distribution list so you don't have to sit here and listen to yours truly actually spit it out from his mouth. May not want to look at me, may just want to digest it and read it at yours leisure, which is fine. The other thing I wanted to point out, we do have these charts. If we're looking down the line, the market is already priced in. This is something I want to point out as well. The market is already priced in these rate cuts. If you look at what the forecast is, you see the current target range right up here. We're at 4.25 to 4.5. By December, this is highlighting December, traders believe there's a 70% chance we're going to be at a Fed funds target rate of 3.5 to 3.75. That's a 3/4 dip in that Fed funds rate, which means every meeting here on, it's a quarter. Data can change that very quickly. The market has already priced this in. We're already sitting in interest rates reflective of those potential cuts. Definitely tomorrow, definitely Wednesdays, there's no doubt about it. But those future ones, they could change very quickly, which could change the long-term interest rates very quickly as well. So the one thing I want to point out as I'm closing this up, and always be prepared, is if you're out there, you're a buyer or you're a client looking to refinance, talk to your mortgage professional and get your information in line sooner rather than later. Get yourself pre-approved. Get ready so that when those dips happen, those valleys, as I like to say, you're in a position where you can lock. You can make a very timely decision. If you do not have your information ready and it's not in the bank, and potentially depending on what time you actually get to talk to your loan officer, you may not get an opportunity to lock that day, and you're going to be subject to the next day. And those days can change very quickly. If you look at this 10-year Treasury, I mean, it's boiled out about 1 month, and you can see the trajectory on a decline, but you can see where it bumps up pretty quickly too, right? It moves. We're not just low. We are going to get some valleys, and we are going to continue to get some peaks. Even as we move into this rate reduction era, that is going to be the case all throughout Q4, just as it has been for the first 3/4 of the year. All right, y'all, have a fantastic week. You have any questions, please don't hesitate to hit me in the replies, make a comment, DM me, whatever you need to do. You can find me also over on the gram, the Mortgage Mouth. And please, once again, don't hesitate to hit that subscription button. We'll love for you to never miss a beat. Come to you every day as well with an episode of the Daily Dose. Very quick 2 minutes of what happened in the marketplace, what changed in interest rates, and what can we expect the following day. All right, everyone have a blessed week. Be safe out there. Crush the week. Believe in yourself. Do all the things necessary to make sure you don't leave anything on the playing field. And if you need anything, you know where to catch me. All right, y'all. Cheers. Have a great week. Bye.